Inside Money is underwritten by Fidelity Investments, offering a complete line of mutual funds, using common sense ideas to get uncommon results like self-directed variable annuities, a tax-advantaged way to save for retirement and other long-term goals. And Scudder, since 1928, America's first family of pure no-load funds, where every dollar you invest goes to work for you. Scudder, with more than 30 funds for growth, income, and international investing.
Hello, I'm Rick Dupuy, and welcome to Inside Money. You know, some people are already starting to call it yellow fever. Others are just plain simply saying investing in gold is the way to make hundreds, even thousands of percent on your money over the next couple of years. Well, I don't know about that, but one thing for sure, after doing very little for the past decade, gold and the price of gold mining shares have both been up sharply this year. Now, the question in everyone's mind, of course, is there still money to be made investing in gold, or has the biggest move already taken place? So my special guest today is the chief economist of the World Gold Council, and we'll get some insight into just how strong this latest gold move may be. And also today, we're going to discuss why you might want to use a trust to help you manage and protect your assets. And you don't have to have $1 million portfolio to take advantage of the benefits of a trust. But now, before we meet this week's guest, top money manager, let's see if the market timers in our weekly survey are still as bearish as they have been for the last couple of weeks. They're still showing some nervousness there, and frankly, the market has not been all that clear either. Well, now it's time to meet this week's guest, top money manager, and he's Wayne Bergen, president of Analytic Capital Management, located in Naples, Florida. Analytic Capital Management uses a management style of finding large capitalized stocks that are selling below their value. And Wayne, frankly, you've done a very good job of doing it. I saw here for the first 3 quarters of this year, you're up about 16%, which means you're running twice what the Standard & Poor's is doing.
Yes, Rick, thank you.
What about between now and the end of the year? I know there's not much time, but there's a lot of people that are nervous, thinking there's a lot of selling going on. Maybe they should go to the sidelines. Others are saying, no, ride through this and be ready to ride the wave come January. Can you give us a little insight in what you think?
I do believe that the next 4 weeks will have some tumultuous times because you have a lot of offsetting tax effects. You have some stocks that have done very, very well. And then some people also own some stocks that have done very poorly. So I believe you'll have profit taking to offset tax losses. So, and I think you're seeing that in the stocks that have done well so far this year. A lot of them have come down. They've gotten a little bit ahead of themselves, besides being targets of tax matching, shall we say.
Well, you're suggesting with that, Wayne, though, that there will be then a lot of pressure on the market because of selling going on. Whether it's taking profits or taking losses, there's a lot of selling going on right now.
I believe so.
Do you suggest the average long-term investor try to come out with some of their money right now and go back in January, or just ride this out?
No, I think if you're a long-term investor, you leave it alone. I do believe that rates will continue to play a little heavily on the market. We've seen the low rates.
Black cloud.
Yes, because we'll have a new range established. I think a higher range established of where the rates will trade, and we've seen the low rates for this cycle.
Okay, as long as we're talking interest rates, what's your feeling on it now? We had the long bond down below 7, and we were all very happy to see it below 7. What's your trading, your expectation now for trading range for the long bond?
I would say we could easily see 6.5. It got down below an area there. I could easily see 6.5 on the long bond. And the range is probably 6 to 6 3/4 over the next year.
Okay, but still staying below 7%.
Yes.
Okay, well that's not too bad. The market should be able to absorb that.
It should. It will. The bond buyers have to adjust to the fact that rates are not just going to keep dropping, and the bond market has to adjust to the fact that, okay, we may have reached the bottom. But they don't need to overreact that we're going to shoot back to 10 either.
But for a lot of people who've moved into income over the last 3 to 5 years, they are going to get a little lesson in understanding that rates don't just go down, they also go up sometimes.
They go up. That's exactly right.
Hey, speaking of going up, you had some very good stock picks for us last time. I want to talk about one area in particular. You had picked General Motors. You're up, I think you're up about 40-50% from where you gave us General Motors. At that same time, also Ford and Chrysler were doing very well. Are you still holding those stocks, or have you come out of them? Because typically at the end of the year, those stocks don't perform too well.
Right. We did come out of General Motors.
All right.
But I do believe if you're a long-term holder and not a trader of trying to top and then pick again, there's a lot of pent-up demand. Absolutely.
Okay.
And they have some very nice designs, and the quality is a lot better.
Okay.
So if you're a long-term holder, hold on to General Motors.
And the same thing would apply to the other two stocks, Chrysler and Ford?
I would say so. They got onto the winning track earlier, but again, the volume is there for both of them to continue with improved as the pent-up demand is released.
Okay. I'm going to ask you, of course, leave us a good stock idea. The last one you gave us, which is, you were here last fall.
Correct.
You gave us was
Pacific Enterprises.
Pacific Enterprises, and if I remember, we checked back on it. You targeted to go to 27, was it?
That's correct.
Okay, you reached the target. Congratulations. You did very well with that, and anybody who followed you, I'm sure, is more than tickled. What do you have for us this time?
Well, we are a large cap buyer, as you said, but we've decided this year we have decided to use a few small cap stocks that have come to our attention that our work brought us up to on our evaluation screens. And the stock that I would recommend to people today is a stock called Castle Capital Incorporated. It's a Canadian company.
Oh, okay. Where's it trade then?
It's traded on the Toronto Exchange.
Okay, on the Toronto Exchange.
The symbol is CCAP.
Okay, well, we'll get it up on the screen. There it is now. You've got to buy up to $3.50. Where about does it trade right now, Wayne?
Stock is trading $2.50
in that range. Okay.
Right
so these
now.
Prices are American that are on the screen.
Those are American prices, but I would say between now at $2.50 and $3.50, buy the stock. My target for the year is $7.50.
Okay. Why do you like the stock? Because you're right, this doesn't follow your normal pattern.
Our work revealed again, an undervalued company. And even though it was a smaller company, it was such a value that we did a lot of homework on it. Some of these smaller ones take more time to do the homework, but also the management is very receptive because they like to get their message out. They like to hear from somebody.
What type of things does it do?
Well, they have two businesses. One is trash to energy.
All right.
And they have a technology that can convert rubber, garbage, plastics to oil or gas.
Okay.
And the other part of their business is metal fabrication, high pressure tubing, double-hulled gas tankers, petrochemical plants.
And let's make sure we point out it's a low-price stock, so there's a usually increased danger, and so we're not implying that everybody will go out and be buying the stock. It's just something that you particularly like right now.
We like it.
How about in the remaining few seconds, one or two maybe companies you might give us on the little larger style? And I only got a few seconds left.
Stone Container, Arkla, those are companies I like, and Westmoreland Coal.
Okay, so we just gave everybody a little bit of variety up there. Wayne, again, if you do as well as last year, everybody will be happy, and we'll thank you for those little year-end Christmas gifts from you.
Thank you, Rick.
Okay, nice seeing you again.